I want you to do something right now. Pull out your last bank statement or open your banking app if you have one and look at every line item, not just the deposits, not just the bills, every line. Because for a significant number of retirees watching this video, somewhere in that statement is a charge that should not be there. A charge that your bank is collecting every single month, has been collecting for years, and that you have the power to stop. Today, this week, with a single phone call or a simple account change. The bank is not going to call you and offer to remove it. They are not going to flag it in a letter. They are not going to send you a notice that says, by the way, you do not have to pay this. That is not how banks work. But here is how this channel works. We tell you exactly what the fee is, exactly why it keeps appearing, and exactly what to do to make it disappear. Let us go through all 5. My name is Finn, and this is Finn Retires, the channel that exists to make sure every dollar in your retirement is working for you, not quietly disappearing into someone else's ledger. If this is your first time here, please hit that subscribe button right now before we go any further. We put out a new video every single week covering the financial rules, programs, and strategies that directly affect retired Americans. And today's topic is something every retiree with a bank account needs to hear. Subscribe, stay with me, and let us start with the fee that is hitting the highest number of people and at the highest recorded rate in history. Let me start with a number that I think will genuinely surprise you. According to the 2026 Money Rates Checking Account Fee Survey, the average monthly bank account maintenance fee has hit a record high of $13.51 per month. That is more than $162 per year coming out of a retirement account. Just to keep a checking account open, before a single purchase is made, before a single bill is paid, before any actual banking service is used. And here's the part that makes that number even more frustrating. According to that same survey, nearly 32% of all checking accounts do not charge a monthly maintenance fee at all. That means roughly a third of the checking accounts available in this country are completely free of this charge. The fee is not universal. It is not unavoidable. It is charged by specific banks to specific account types, and it continues to appear on statements month after month, because most account holders either do not know they're being charged or do not know there is an alternative. For retirees specifically, the monthly maintenance fee creates a particular kind of frustration that deserves direct explanation. Most monthly maintenance fees can be waived if certain conditions are met, typically a minimum daily balance, a minimum monthly direct deposit amount, or both. When you were working, meeting these conditions was straightforward. Your paycheck deposited automatically, your balance stayed above the threshold. But retirement changes both of those dynamics. Social Security payments and pension deposits may or may not be recognized by your bank as qualifying direct deposits. This varies by bank and by account type, and it is worth confirming explicitly with your bank rather than assuming. And retirement spending patterns, drawing down savings rather than accumulating them, occasional larger one-time expenses, variable monthly spending, can push account balances below minimum thresholds in ways that were not an issue during working years. The result is that many retirees who never paid this fee during their working life start paying it after retirement simply because the conditions for the waiver are harder to meet on a fixed income. What you can do about it is specific and straightforward. First, call your bank and ask whether there is a senior account type available that eliminates the monthly maintenance fee. One of the most notable examples is TD Bank's 60-plus checking account, which eliminates the monthly fee entirely for account holders who are 60 years of age or older, includes free check printing, waives the annual fee on a small safe deposit box, and offers Sunday banking hours at many branch locations. It is one of the few explicitly senior designated checking products at a major national bank. The 4 largest banks in the country, Chase, Bank of America, Citibank, and Wells Fargo, do not offer dedicated senior checking accounts as of 2026, but many regional banks and credit unions do, and online banks and credit unions consistently offer fee structures that are more favorable than traditional large bank accounts for retirees on fixed incomes. If your bank cannot waive your maintenance fee and does not offer a senior designated account, the most effective action is to switch either to a credit union in your area, to a community bank, or to an online bank that offers fee-free checking. This is a one-time process that takes an afternoon, and the $162 per year you save from that point forward is a permanent return on that afternoon's effort. The second fee is the one that carries the highest per occurrence cost and the most potential for cascading damage, the overdraft fee. According to the 2026 Money Rates Survey, the average overdraft fee is now $32.75 per occurrence. And the word occurrence is important here because a single insufficient funds event can trigger multiple overdraft charges if multiple transactions are processed before the account is corrected. A retiree whose automatic utility payment processes on the same day their account runs low, while their grocery store purchase from the day before also clears, that is potentially 2 overdraft fees from a single incident, totaling over $65, for what may have been a $20 shortfall. Retirees on fixed incomes, where monthly income arrives on specific dates and automatic payments can process at any point, are particularly exposed to this pattern. There are several ways to address the overdraft fee that do not require switching banks. The first and most immediate action is to call your bank and request a reversal of any recent overdraft fee. Most banks will reverse one overdraft fee per year for customers who ask and who have a history of on-time activity. This is an informal policy that exists at most major banks, and that bank employees will not typically volunteer unless you call and request it. One phone call, done today, could recover $32. The second action is to sign up for low balance alerts, text or email notifications that your bank sends when your account balance falls below a threshold you set. If you get a notification that your balance is at $100 on the 17th of the month and your automatic insurance payment processes on the 18th, you have the opportunity to transfer funds before the overdraft occurs. Setting up this alert takes 5 minutes and can prevent overdraft fees indefinitely. The third action is to opt out of overdraft protection on your debit card for everyday purchases. Without overdraft protection, your debit card will be declined at the point of sale when funds are insufficient, which is embarrassing in the moment but costs nothing, rather than being approved and generating a $32 fee. You can make this change by calling your bank or through your online banking settings. The third fee is one that affects retirees who travel, who live in areas where their bank's ATMs are not conveniently located, or who simply use cash regularly. This is the out-of-network ATM fee, and it is actually two fees happening simultaneously that most people think of as one. When you use an ATM that is not part of your bank's network, your bank typically charges you a fee for using an outside ATM, usually between $1.50 and $3.50. And the ATM owner, the company or bank that operates that machine, also charges you a separate fee for using their equipment, typically between $2.50 and $4. A single out-of-network cash withdrawal can therefore cost between $4 and $7 on top of the amount you withdrew. For a retiree who makes 2 out-of-network ATM withdrawals per week, that adds up to $400 to $700 per year in fees alone. And unlike many other bank fees, this one is triggered by a specific action that has an easily available alternative. The solution to out-of-network ATM fees is a combination of 3 habits. First, before you travel anywhere, use your bank's ATM locator in their app or website to identify in-network ATM locations in the area you will be visiting. This takes 2 minutes and eliminates the need to use an out-of-network machine. Second, when you are grocery shopping, use the cashback option at checkout rather than making a separate ATM trip. You get your cash, the transaction uses your existing debit card, and there is no ATM fee of any kind. The cashback limit varies by retailer, but is commonly between $20 and $100. Third, if your banking pattern regularly puts you near out-of-network ATMs, consider switching to an account that reimburses out-of-network ATM fees. Several online banks, including Ally Bank and certain credit union accounts, offer monthly ATM fee reimbursements that effectively make any ATM free to use anywhere. If you regularly pay $20 to $30 per month in ATM fees, switching to a fee reimbursing account is a straightforward financial win. The fourth fee is the simplest and most purely unnecessary fee on this list, the paper statement fee. Many banks charge a monthly fee, typically between $1 and $3, for mailing a physical paper statement to customers who have not switched to electronic statements. For a retiree who has been with the same bank for decades and has always received a paper statement, this fee is almost certainly on the monthly statement, and almost certainly not being noticed because it is small and consistent. But at $2 per month, it adds up to $24 per year. Money that goes out for a service that is available for free in electronic form. Electronic statements are identical to paper statements in every meaningful way. They show every transaction, every fee, every deposit, and every balance. And they can be downloaded and printed at any time if you want a physical copy. Most banks allow you to switch to electronic statements through your online banking portal in less than 2 minutes, and the monthly paper statement fee stops immediately. If you are concerned about receiving important banking documents electronically, specifically for record-keeping purposes, it is worth knowing that most banks retain digital copies of all statements for at least 7 years, and in many cases longer. You can download and save these files to your computer, to an external drive, or to a cloud storage service at any time. The information is not less secure in electronic form than in paper form. Paper statements mailed to your address are actually more susceptible to mail theft than a password-protected online account. Making this 1 2-minute change stops an unnecessary fee permanently, and in many cases also reduces your exposure to identity theft through mail interception. The fifth fee is one that specifically affects retirees who travel internationally or who make purchases from international websites or vendors. This is the foreign transaction fee, a charge that most banks apply when you use your debit card for a transaction in a foreign currency or through a foreign bank. Foreign transaction fees in 2026 typically range from 2 to 3% of the purchase amount. For a retiree who takes an international trip every year and spends $3,000 while traveling, a 3% foreign transaction fee adds $90 in charges that could have been entirely avoided by using a different card or account. For retirees who regularly shop online from international vendors, European retailers, international subscription services, overseas medical supply companies, these fees accumulate silently on every transaction. The solution depends on your specific situation. If you travel internationally regularly, the most effective fix is to open a checking account or obtain a debit card that specifically waives foreign transaction fees. Several major banks and online banks offer these options. And credit unions with travel-focused members often have favorable international transaction policies. If you use a credit card for international purchases, many credit cards, including several that are specifically marketed to travelers, charge no foreign transaction fees and can be more cost-effective for international spending than a debit card in any case. If your international purchases are primarily online and infrequent, you may be able to avoid this fee entirely by using a payment platform or transfer service that converts currency before the transaction processes. The specific solution depends on how frequently and in what form you incur this fee, but for any retiree who is currently paying it, checking whether your existing bank or credit card has a waiver option is the first and simplest step. Let me tell you about a retiree named Lawrence, 72 years old, living in Georgia, retired for 6 years. Lawrence has had the same checking account at the same bank since 1994. He has never thought much about his bank statement beyond the deposits and the major expenses. He pays a $12 monthly maintenance fee that he has been paying since the account threshold conditions changed after his last employer's direct deposit stopped. He has triggered 3 overdraft fees in the past year from automatic payments processing just before his Social Security deposit arrives. He uses an ATM near his grocery store that is not in his bank's network because it is more convenient, and he makes 3 withdrawals per month. He receives paper statements and has been paying a $2 monthly fee for them for 11 years. And he takes 1 international trip every 2 years and uses his regular debit card throughout, paying foreign transaction fees on every purchase. Lawrence, if he sat down and added up all 5 of these fee categories for a single year, would find that he is paying well over $600 in entirely avoidable bank fees annually. Not in one large visible expense, in small, quiet, consistent charges that individually feel too small to address and collectively add up to real money, Lawrence does not need a new financial strategy. He needs an afternoon, a phone call, and the information from this video. Here is your action plan. This week, 1 action every day for 5 days. Day 1, pull up your last 3 bank statements and circle every fee charge, no matter how small. Day 2, call your bank and ask specifically whether a senior account type or fee waiver is available for your age and account type. Day 3, set up low balance alerts on your checking account through your bank's app or website and confirm whether overdraft protection is active on your debit card for everyday purchases. Disable it if it is. Day 4, open your bank's ATM locator and identify the nearest in-network ATMs to your home, your grocery store, and any location you visit regularly. Day 5, log into your online banking, find the Statement Preferences section, and switch from paper statements to electronic statements. 5 days, 5 actions. And the combination of those actions is likely worth several $100s per year in fees that simply stop appearing on your statement. If this video helped you identify a fee you have been paying that you did not need to, please share it with someone in your life who might be in the same position. Retirees are among the most loyal bank customers in the country, and that loyalty is not always being rewarded. Sharing this video takes 10 seconds and could save someone hundreds of dollars this year. Please share it today. Drop a comment below. Which of these 5 fees are you currently paying? Have you ever called your bank and successfully had a fee reversed or waived? Your experience is genuinely useful to this community because real stories from real retirees are what help people feel confident enough to make the call themselves. Tell me your story below. I read every comment on this channel personally. The next video on this channel is going into a government benefit program that most retirees over 65 have never heard of, one that provides real financial assistance, and that has income eligibility thresholds generous enough that many middle-income retirees would qualify. If you are not yet subscribed, hit that button now so you do not miss it. Take care of yourself, protect your retirement income, and I will see you in the next one.